Right, good morning, everyone. Good morning, good morning. I'm just sharing my screen. Um, hello, hello. Okay. Yeah, not been a good year where I'm living. With power cuts, a lot of maintenance is going on. No idea why. It seems to be sort of once a month, which is unusual. They give you about 12 hours notice, and you may or may not get that notice because there's nothing really, doesn't seem to be a formal announcement. It just gets posted on the community pages within where the town that I live. So I didn't get the notice until I actually got up for work to no power yesterday, and then uh, found the information. So I had no power yesterday all day long until the afternoon. So yeah, very frustrating. But you can't deal with things that you're not in control of. So maybe solar power is the way to go. Anyway, so I hope you all had a good day yesterday, regardless. I've just been trying to catch up, and I did some work last night and just fine tuning that this morning. So essentially, what we have here is a market that is overreacting to these data points in many regards. Um, so even non-red calendar news, we're seeing on that we're seeing movement. So it seems to be a lot of pent up um, demand for the Fed, really, at this point. Um, so we're having to be patient, really, but dealing with these daily fluctuations, which is good for us. We like the volatility because we've got a strategy, a methodology, and to be quite frank, the bigger the moves, the more opportunity there is to scale in to these rallies and these dumps. So that's all good. Um, Today, we have in 40 minutes' time. So we're going to make this relatively short. We'll give this half an hour max and be set for the data that's coming out with continuing jobless claims and the Federal Reserve's preferred um, inflation reading in PCE. Now, leading into that, what we've got here is a euro which has come under pressure due to stagflation concerns out of the eurozone. And one of our members was asking, what now that the euro has broken below today's point of control? And I flagged this support area, noting that there are stops below. You've got these double bottom lows over here on this hourly chart. Um, and that's essentially the origin of the rally from yesterday that was picked up on with the data. But below there, you'd be in anticipation with investors being involved in that move, sparked by institutional money and retail money, but the stops would be likely placed below the lows. So more often than not, and bearing in mind we've got yesterday's low down here as well. So as I keep saying, 80% of breakouts fail. If we were to see a attempted breakout that would trigger stops, you may find some support. This over here is definitely a congested area that I've just pulled up, and it just happens to respect 108.50. So in here, you'd expect there to be support if there were to be a break of yesterday's lows, triggering stops, finding support, and moving back in on the sell-off. So you'll have profit taking and so forth. This is probably a target for shorts. People that have shorted, they're targeting 180.50 as a psychological number. So we could have a little breach there and some follow through and perhaps a correction. The US dollar has come up into a resistance zone. Obviously, it's heavily weighted against the euro, so it's essentially the euro just flipped the other way around, if that makes sense. And I can show you that on the. So that looks very similar to the euro. Flipped upside, flipped the right way around, right? Yeah, same image, just the other way around. Um, Now, also of note, we've got yields that are under pressure. So that would be expected to be a weight on the US dollar. And someone was inquiring, why isn't gold moving? Well, because yields are low. So gold, even though the US dollar is rallying, gold is remaining relatively firm, high up, because US yields are under pressure. Okay, any questions with regards to any of that so far, guys? So essentially what we have here, we've got weak growth and high inflation that are reviving talk of Eurozone stagflation. So that has so far been the theme as we come into the US session. And now we're sitting back on our hands, waiting patiently for this data to come out. And what the data is going to bring, we have no idea until it's out. So personally, I'm not going to be in any trades ahead of the data. I'm going to wait for the dust to settle and see how we set up after the data and volatility, which we're likely to see because these are very key data points, ahead of what will be non-farm payrolls tomorrow as the key event and a long weekend in the US. So what you tend to find, volatility ahead of a long weekend, profit taking as we move in on calmer markets. But we'll wait and see what non-farm payrolls brings us. Um, Now, in regards to the Fed, tightening expectations have taken a bit of a hit due to weaker data of late. So if we do get strong PCE and numbers out of the jobs market that are leaning towards a tight labour market, then that puts the Fed back on track, or the sentiment rather, that for a hawkish Fed. Overall, personally, I'm biased hawkish at the Fed. I think the US economy is standing in better stead than other economies, so that should underpin the US dollar. But what we're seeing in the US dollar is something that we've been talking about for quite some time, is a sensible looking correction, right? So this is the weekly chart, and we were talking about this 1, 2, 3, 4, 5, 6 weeks of continuous strength in the dollar. Well, it's bound to see a correction at some point, and it just makes sense that it comes up into resistance and corrects. So that's the game that we've been playing, the cards that we've had, and we've been looking for that. So that's what we're seeing. And we've also been looking for that in US yields. So those that have been following these meetings will will concur with that. So that's what we've seen. Um, but these corrections could quite easily be met in due course with a continuation to the upside. Um, so let's see. In fact, odds of a Fed hike in September fell back to 10% due to data this week, and that's down from 25% on Tuesday. So that's where you've seen that. You've seen weakness in the dollar. I mean, you saw that yesterday, guys, um, on the prior day. So, but we seem to be having a correction into that weakness. But will it roll over? I mean, it could well roll over depending on the data today. Also, we've got this W formation in the Dixie, which probably means we've got one in the euro. Let's have a look on the 4 hour chart. Yeah, so on the euro, we've got this M formation. So that too plays into my corrective thesis. But these PCE readings are going to be very important. Um, with the headline, what's the headline expected at? Gosh, it's pretty high, 4.2. Okay, that's on the yearly. On the core, there's the headline, 3.3. So year over year. So we'll be looking at in the main the year on year and the core. And the core, you can look at the monthly and yearly. Um, Now, if we come out in line, or indeed anything above those numbers, then that's likely to be risk off. So lower stock markets, stronger US dollar, um, because essentially it means that there's has not been any progress, or there's unlikely to be any progress for the Fed meeting its 2% target in the near term, and that's until we see an economy in the US slowing, well, sub-trend growth and labour market, uh, looser labour market. So that should all be very hawkish for the Fed. Okay, so all eyes on that. Now, if we do get a correction in the euro, I'm being asked, where will resistance be? Well, my approach is to use the Fibonacci tool, and you can base it on current lows. So the 4 hour candle at the moment, um, low is down at 108.57, and the 38.2 is 108.88. I mean, the key fibos for me are this batch that I've got on my screen. So all of those levels there, I've been monitoring right the way up into the 78.6, and the neckline of the M formation, which is between here, red for resistance, in here. So all of that in there. So in and around the 78.6 and the 61.8. Call it 109 even. 109 between 109 and 109.20. I'd expect to be firm resistance. You can bring this into an hourly chart and just look at these candle closes. So you've got the 61.8 aligning with that candle close there. You see where these two sort of candles close and open. So you expect there to be resistance in there, potential resistance in here, nearer term. Okay. Now, if the data comes in weak, then that's the scenario. If the data comes in strong, then you're looking at all of this space below. So on the hourly chart to the downside, you're looking at these levels that I'm printing at the moment. So a break to 107.80 could be on the cards. And we can look to the daily ATR. We're at 80 pips. It's pretty low. What's going on this thing? Bear with me. Okay, so right, about 80 pips is the average range for the day on any given day within the last 21 days. We've seen the majority of that already. That's not to say that we can't see an extension to the downside, but it's just worth noting. So if you're targeting 107.80, that's almost double the daily ATR. But if the data is data, the data is going to be the driver. So you can obviously see moves of greater magnitude than the ATR if data driven. All right. Why are you saying? Why are you saying that, KD1P? Is there anything you want me to look into? 20 odd minutes until the data. Right, guys, any questions? Dollar CAD. Okay. Right, so we're up in resistance in dollar CAD on the daily chart. We had support in here. Are we correcting up again into resistance? Potentially. We're yet to break that support level. 135.9. We're inside of yesterday's range. So the target is either a break of the highs of yesterday or the lows. So it's one of the two. Which one's it going to be? If we come down to the 4-hour chart, we can start to look at the behavior of price. Strength coming in from the bears, correcting, strength again, very steady correction. It looks to me that the bears are going to be ready to pounce any moment. We've come up pretty steadily in this Fibo, breaching the 61.8, strong rejection, continuation to the downside on the cards. That would be my best bet at the moment. Having said that, what's oil doing? I think oil's coming up to, well, no, I think there's room for oil to go higher. But we've got 82.50 as a target on the upside. This is a resistance area on the daily chart over here due to due to all of this congestion in there. So that's a resistance area that we're coming up into. So I've just flagged that. If we get a break of that, then if we get a break of 82.50 with conviction, not just a wick, we'd be looking for hourly closes. So if we get, let's say, a 15-minute rally through here, then you'd expect it to act as support. And in that case, if it breaks up through here with a series of 15 candle closes, for instance, then on the hourly chart or 4-hour chart, you'd expect it to correct and continue higher, and that would be bullish for the Canadian dollar. Okay, so keep an eye on oil as well. General risk appetite. The commodities tend to track stocks, so if we get stocks that are falling, then that's not going to be so good for oil nor the CAD because that's risk sentiment on the back foot. But again, it will depend on this data probably today. Um, so we're looking. You'd be if you're looking to short CAD, dollar CAD. You want this data to be the trigger, really. So just sitting in your hands, waiting for that to come out. I've just covered oil in that quick analysis around CAD. Recession could be upon us. Yep. New Zealand. Let's go out to the weekly chart on New Zealand and see what's going on. All right, WM formation. So just using that as a foundation for the analysis. So displacement, correction back up into test. First of all, you've got these lows here, and then you've got the neckline. So we've already come up into those lows, acting as current resistance. But this seems to be a premature correction. We could well see a couple of weeks of correction. The 38.2 at 60.87 comes in at the neckline, in and around the neckline at least, here. So all that there is the neckline for a retest. And you'll have an impulse, a correction, and then you expect a continuation to the downside. Or we're just going to close, this candle will close wherever it's going to close, and we'll see a drop in continuation of the trend. But my best bet would be it's not to say we can't come any lower, but my best bet is looking for a deceleration of this sell-off and a continuation in the correction. So regardless of where this closes this week, and regardless of whether we get maybe a pop to the downside, we could quite easily come into 58.40, those lows, while we're in this corrective phase for a move up. However long that would take, might take a few weeks, might take a couple, might take a whole month, might take longer. Don't know, but I think we're going to get a correction into that sell-off. But that's the weekly analysis. And then on the daily, again, we're in corrective territory at the moment, building a box on the downside. So that may well continue over the next days. Like this. Or we're going to get a move out of the box one way or another based on today's and tomorrow's data. Currently, it seems that we're just range bound. No bias either way at the moment. As we move down into nearer term timeframes, we're in the middle of the range, level 2, and we've got space to the downside. So longs maybe a topping pattern here, peak formation, had a correction with this candle here, the wick, so we've corrected. So far we're finding support. Let's just zoom in. So far we're finding support there. Coming in close to it. And this is the top of. So there's likely support in here that's being respected at the moment. But a break of here, you'd expect a break and a move lower into this impulse. And there you'll have stops below, and you'll potentially breach that area. But let's wait for the data and let's see what happens. Okay, so you've got your audio fixed, great. Euro flying, correcting from the support area in line with the analysis that we spoke about. But this is ahead of the data, so let's wait until the data. 11 minutes till the data. So, should we wrap it up, roll up our sleeves? I think that's given us a fair overview on what to look for. Um, on the data, then, as I said, let's take the euro for example. So we've got all of this to move back up into, or we've got all of this space to target. So it's one way or the other. Either we're going to break to the downside and we'll have 108, say 108, 108.20s on the card. I'm not going to pinpoint the level because there's no point in doing that. 108, 27, 25 within the 20s. Right, all of this down here, right, into the supportive area. So you've got this sort of bracket to look to the downside and to the upside, back up into the M formation neckline. But I mean that can fly to either target. So be it. Um, being in the market during the data is treacherous. You can have wild swings and you can get stopped out, you can go the right way, you're in the money, and then all of a sudden you're not, and you're losing money. So I prefer to wait for the dust to settle and see how the land lies. You can give it, I mean, if the data is overpowering and obvious, then you can give it a couple of minutes and enter the market. If it's moving strongly in the direction that makes perfect sense. I mean, if the data comes out firmly above consensus or firmly below, but otherwise it may take longer for the market to think it out, and you can wait up to 15 minutes before you see an entry, a setup, right? So by by that I mean, so let's say the market, I'm sure I'm going to do it very well with this, but so the market shoots up in perhaps direction of the data, then pulls back right back into everyone that went long, might even surpass there, comes back in the right direction in line with the data again, pulls back, does some volatility in around, and then you're getting this sort of scenario. Then as you've got support being built up, then you might want to be thinking, well, I'm going to go long. right? So you've let the data play out, let the volatility play out. It's established a base, right? In the correction and the move up, W formation, the retest of the neckline. For instance, this could be on a 5 minute chart, a 1 minute chart. And then you've got strong candles. This might be a strong engulfment to the upside. You might just want to buy at market, pulls back, gets respected, another engulfment or some pins and a strong move out, breaking resistance. Okay, I'm going to get involved, buy. And you're looking for a scalp up to, well, in this instance, it would be the neckline of the M formation on the 4 hour chart. All right, so I hope that makes sense. We can maybe go over that in a separate time together. But let's call it a day then, and I'll see you in the chat room. And good luck for the day ahead. Thank you as always for joining, and may the markets go with you all.